Guys, how is it that the VA loan denial rate is so much lower than conventional FHA and USDA, right? And we're going to throw up the figures here on the screen. VA denial rate, and this data is not made up. This is from HUNDA, which is a federal policy. And VA denial rates are 8.2%. And this was a study done over, 369,000 mortgage applications in 2025. VA's was 8.2, USDA is 12.5, FHA is 12.8, and conventional was almost twice the denial rate of VA. I want to have my guest today, Murrieta and Jardy. They've got a lot of military experience. Murrieta has been a military spouse and a military mom, right? And you do a ton of VA, and of course, Jardy is active duty and does quite a bit of VA business. So, Murrieta, let me start with you. What are some of the reasons that a VA loan is less likely to get denied than a conventional or FHA?
I think because of the flexibilities with the VA guidelines, as far as like credit, income, and debt, there's a lot of gray areas, so that we can use that to our advantage in a situation where a client might have maybe not a long work history or transitioning jobs, or maybe not the perfect credit score. So just the flexibility with the VA guidelines, I think that's a big advantage for our VA clients.
That's good. I like that. What about you, Jardy? What do you got to say? I mean, I know you've done quite a bit of VA business, and some of the loans that you've done would not have gotten approved conventional or FHA. I've seen them.
The ability to operate in that gray area and actually paint that financial picture for individual borrowers for the VA loan, I think that's extremely valuable. And I just don't think realtors fully understand the power we have to allow us to do that, to really, argue and have that, picture presented to the underwriter to enable us to get that loan to approval.
I want to interject for a second. I heard you both say the phrase "gray area," right? And in financial industry, I mean, sometimes that can be a bad phrase. Like, "Hey, what are you guys doing? Something funky? Or doing something fraudulent?" Of course, we're not. Gray area. I think what I'm hearing you say is there's a lot of room for underwriter discretion, right? Isn't that what we're saying?
Correct.
It could go either way, and the wrong underwriter is going to say, "No, I don't like that. That's too negative. I'm not going to go for that." Another underwriter might be willing to take that risk, and that's what we mean by gray area, right? It could go either way, and VA allows the underwriter to make that judgment call, right? What do you say to that, Murrieta?
Yes, I mean, the way I look at it for us as loan officers, when we're helping our VA clients, it's just really knowing the guidelines, being savvy, and we're pretty much like their lawyer with the underwriter. It's like here we're presenting, their case, and if we're knowledgeable, that's only going to be better for our VA clients and easier for the underwriter to see the picture we're trying to paint once we have all the information, especially with military families. PCSing, deployments, sometimes things get missed, payments, or maybe some sort of credit issues. So just painting the full picture, us knowing how much wiggle room we have with the guidelines, I think that's really important.
Let me ask you this, Jardy. Thank you for that, Murrieta. Let me ask you this. I mean, we're looking at, again, you guys are looking on the screen, you can see the VA denial rate was 8.2% last year compared to conventional 15%. How much of an impact on those figures comes from the fact that a veteran typically doesn't have to verify a lot of funds to close, whereas with a conventional buyer, FHA buyer, you got to validate, you got to verify, hey, 3.5%, 5%, which is a good chunk of change. Whereas most of the time, VA buyers don't have to show a lot of money. But how do you think that factors into these figures that we see on the screen?
I think that factors, pretty heavily in the majority of the figures, because if they don't have to show, the minimum 3.5 or 5% down, additional to, maybe realtor fees and, closing costs, then, there's a lot more flexibility, especially for the realtor themselves to go and say, hey, this is how, well, at least for the loan officer and the realtor to kind of, have that conversation of how they're going to structure this, right? So, hey, this borrower needs, they need a little bit of help for their closing costs, right? And then, most sellers, in typical markets, they are allowing the seller, it's not always, set in stone, but the seller normally covers the commission costs. So now you're looking at a way where the buyer can probably come in with little to maybe even no money to purchase that home. And that's very powerful.
I can see how that can make a big difference, because if you get in a conventional loan and you got to cover your own down payment, 5%, plus maybe cover a bunch of closing costs. Murrieta, in your opinion, what's the impact of the fact that the seller is allowed to pay off veterans' debt to help that veteran qualify? You feel like, and of course, FHA doesn't allow that, conventional doesn't allow that. Do you feel like that makes a difference in these figures?
Of course, it does. So, I mean, and not every scenario is going to be the same, definitely. But if we've had, an ideal scenario where we are having the seller cover closing costs, or even have our veteran come in with minimal deposit, they can pay off debt to better be prepared for that new mortgage payment. So maybe using that credit. When I've worked with a lot of realtors that do negotiate repairs and all these credit, and it's like, hey, we're able to put the veteran in a position even better from when they started, when they were looking for a home, because not only we were able to negotiate credits to cover closing costs, alleviating them coming out with out of pocket, but now we're paying some high interest debt, probably some credit cards or personal loans, and eliminating those minimum payments to allow them to be more comfortable once they start paying on their mortgage payment.
Another reason why, the numbers are a little bit higher versus the VA loan is because, with the VA loan, you don't have to pay the private mortgage insurance, right? So that's an additional $200 to $300 on your monthly payment that the borrower does not have to account for, right? So if you're looking at, a $500, $400, $600,000 home, that's looking at, $200 to $300 extra a month on top of their principal, interest, taxes, and insurance. Now, if it's, let's just call it, $4,000 mortgage payment. Now you're looking at a, $4,300 mortgage payment. And if those numbers are tight and they're a little bit low on funds or monthly income, then now your deal is kind of dead, right? But with the VA loan, they don't have to worry about that. So
that's awesome. You're right. I mean, I heard you say $200 to $300. It could be very much closer to $400 a month or something like that, depending on the price. So really what we're saying here is the veteran, by and large, is going to have a lower payment. If you line up a veteran and a non-veteran, VA versus, they're probably going to have a lower payment to the tune of $300-$400 a month. This is good stuff, guys. In closing, any last words that you want to share with real estate agents that are watching this that represent VA buyers, and maybe, they're a little averse to VA guidelines because, they've had a bad experience, but these numbers on the screen, they don't lie. These are federal figures. Any last words of wisdom? Murrieta, go. You go first.
As far as for realtors, I hope they realize like the flexibility with the VA loan. So even just the chances of a deal going south, I mean, we have so much to work with. If something happens to the borrower's funds and they don't have money for a down payment, that's not going to kill our deal. If something happens with their finances, we could always kind of go back to the drawing board and negotiate those credits for closing costs, or even pay off debt to pretty much finalize the loan. So just the flexibility.
That's awesome. Jordan, any last words of wisdom before we wrap up here?
To realtors, I think it's important who you work with, right? So just get you someone that's really savvy on the VA loan specifically, and then they can definitely, do wonders for you in that space.
Yeah. Good to go, guys. Both of your contact information is on the screen. So anybody that wants to reach out to you to get help with a VA loan, they're going to hit you up. Thank you both for your time. Appreciate you. And we'll see you on the next one. Okay.